Welcome back traders, Jon here. Bitcoin just failed to break this $27,000 level while Ethereum is at a major support level, and CPI inflation numbers came out, which I'll explain right now, so stick around until the end of the video. The CPI inflation rate for the United States just came out yesterday on the 10th of May at 12:30 p.m. GMT time. We can see that the consensus number was actually 5%, but look at what the actual forecast came out as. It actually came out below expectation at 4.9%, which means that inflation is rising at a slower pace than expected. And this actually had a positive outcome on the market, as you'll see in a moment. Many people were actually expecting a higher than consensus number, closer to 5.5%, which actually would have been bearish on the markets, as that would mean inflation was rising quicker than expected. But as much as the number did come below the consensus number, it was only 0.1%, which basically meant that there was not much movement in the market. If the number came out at 4.5% and was a 0.5% difference, we would have seen a massive boost in the markets. A lot of people were actually expecting it to come down at 5.5 to somewhere around 6%, which would have been extremely bearish, but we did not see that. Let's now jump over to the charts. Here we're looking at Bitcoin on the daily time frame. Now there is a major support level at this $27,000 level. That's what we were waiting to actually break, to potentially come down to this bigger support level and actually ride this wave to the downside. But you can see we actually had a big doji bar right here and we failed to the downside. We actually quickly broke that $27,000 level, but prices quickly rose back to the upside. The reason this is because the CPI inflation numbers came out basically right on consensus. Consensus number wasn't overly bullish or overly bearish, and we can see that we're continuing in this sideways trading range. Again, we're moving down, up, down, up, down, up, and we're just making this M pattern moving sideways, slightly up, slightly down, slightly up, and then slightly down again. This major doji bar was a big bearish bar to the downside, but you can see it quickly reverse once we came into this support level. A lot of people were actually expecting this break, come down, retest this major support level. Reason being is there is a lot of resistance initially back in this area, then we actually broke this, then this resistance level actually became a support level, and when resistance is broken, it then flips to a support, and this would be the area that a lot of people were looking to come back and buy into. But again, you need to be expecting what's happened in the past is going to happen in the future. You can see that we're just traveling in this sideways direction, even followed up by this EMA. Here, the EMA was actually pointing to the upside direction, which means the probability was higher that we should be trading to the upside and taking longs rather than shorts. But you can see here, look at the EMA. We're slightly up, slightly down, slightly up, slightly down. We're going sideways, which means there's not overly bullish consensus and there's not overly bearish consensus. And the reason that was because of those numbers that came out. And it would also mean that you need to be buying low and selling high. As I've been always speaking about, you always need to be looking where is support, where is resistance, what have we done in the past, and we're going to continue doing that in the future. I always said that this would be a perfect level to actually buy and then retest this upper bound of the trading range. The reason being is if we've been in a trading range for over 2 weeks, then we're going to continue that action unless you see a major breakout to either direction. And you can see a lot of traders actually got trapped here using this doji bar, and people expecting, oh, we're going to be massively bearish. But I was saying in yesterday's video that this would be the perfect area to buy to then retest the top of the trading range. Scrolling in a little bit closer on the Bitcoin chart, you can see that we're in a form of a symmetrical triangle where we have converging prices from the top side and converging prices to the bottom side, actually going to meet at this apex of the triangle. Here, we try to break out below this support level. We've then used this triangle as support, potentially coming back to test this resistance level, come back and test this support level before we then reach the apex of the triangle and decide which direction we're really going to break out. A triangle pattern is a 50-50 pattern. Again, just shown by this EMA. It's not overly bullish or bearish, and it is then confirmed again with this triangle converging pattern. There is no bullish breakout, there is no bearish breakout yet, but we can confirm that if we were going to bring this level, we actually aim from the top side of the triangle to the bottom side, and we actually bring it to the apex of the triangle, and then we scroll out and actually have a look, where would this meet? And where would it meet? It would meet exactly in this area that we was talking about before, which was initially resistance level. It then broke through. It's then going to flip as a support level. And so not only do we have this support level through here, we've also got a one-to-one measured move of this triangle going to end in this area. But since a triangle is a 50-50 pattern, it's not overly bullish, it's not overly bearish, there definitely could be a bullside breakout. And this bullside breakout would actually look at the $32,000 per Bitcoin. So we're either going to be retesting this $24,000 of Bitcoin, or we're going to be exploding up to this $32,000 of Bitcoin. Now, I'm just waiting. I'm not letting this pattern, because it's not overly bullish or bearish, I'm not trading the pattern just yet. We need to wait. As you can break a triangle into thirds, we need to wait for this last third of the triangle, which is the apex point, and it's the highest probability chance that that's where we're going to get the breakout. So we're still just a couple of days away. And the trade that I would be looking at, and I spoke about in yesterday's video, is buying in this area, buying in this support area, and then retesting to the top of this triangle for a really quick scalp. We're not overly bullish, so you don't want to be just trading to the long side like we were back here when the EMA was just pointing to the upside. Here, the EMA is pointing sideways. We've also got a 50-50 pattern in the symmetrical triangle. So if you are going to take positions, you want to be quick in and out and just take a nice and easy profit. If you were to buy in somewhere in this area and retest the top, that's a perfect 5 to 6% trade. That's absolutely magnificent. When you're trading enough size, 5 to 6% is going to be more than your entire weekly pay. Now looking at the 4-hour chart for Bitcoin, you can see that we have a really strong support level in this area, and you can see why prices are actually really struggling to break through. We've been in this trading range up and down, up and down, up and down. Again, you need to think, if we've been doing that for the last few weeks, we're going to continue this action until we get that really strong breakout. You can see that this bar right here was actually right when CPI came out. Because the CPI number came out below expectation and was actually more of a bullish number, you can see that markets reacted, and we had a really good 2% push to the upside right as soon as CPI came out. But it was then followed up by a really strong bearish movement to the downside. From the top to the bottom, we actually dropped over 5%. But you can see that we quickly had a 3% wick. Reason being is there's a really strong support level. We're in a 50-50 pattern of a triangle, and the exponential moving average is sideways. So there is no extremely bullish or extremely bearish case. You need to be trading what's in front of you and not get trapped in a trade, because a lot of people would have thought, oh my God, as soon as we break this level down here, let's actually get short. But that was actually incorrect. And you can see a lot of traders got trapped in this area and then pushed to the upside, making them lose their trade. And in yesterday's video, I was talking about this would be the perfect area to be buying in, because we're at support level. We're in a trading range. We're inside of a 50-50 pattern. You have to expect that this is going to be a super strong support level, and we're going to come back and retest this type of resistance level. As you can see, 1, 2, 3, 4, we've failed to break above here. We failed to break below here. We're going to continue that trading range until we reach the last third of the triangle pattern. One last thing I just want to point out is down here on the MACD histogram. You can see that all through this movement, we had a solid downside movement on the MACD histogram, but you can see we're having these big bear bars, but look, the MACD histogram is actually ticking to the upside, which means there's a lot more buying pressure than there is selling pressure. This means that as much as price is moving down, there's actually a lot of buyers in this area shown by this MACD movement, and this is going to hold as support and potentially push back into this trading range level. Before I move over to Ethereum, make sure you like the video and subscribe, as I'm releasing trading content every single day. Now taking a look at Ethereum on the daily time frame, you can see we have a really strong support level. Reason being is this initially was a resistance level. We then broke through, used it as support, and then continued higher. Once a resistance level is broken, it is going to then flip and become a support level. You can see this by support, and now support again. Even with the CPI inflation numbers coming out, we were initially bullish, we came back bearish, and you can see that we're just supporting off that bottom end of the trading range. The exponential moving average, even on Ethereum, is moving sideways, and the MACD is not overly bearish. As much as we're having continued bearish movement to the downside, you can see that these bars are very, very, very tiny. in comparison, when we look at this big movement through here, we had a really strong movement on the MACD. But now this pretty strong movement to the downside, look, we've had really small movements on the MACD. It is slightly more bearish, but again, it hasn't had that continued momentum that we need to see to then trade this to the bottom side. Looking at Ethereum now on the 4-hour time frame, you can see that we're just holding between these trading range levels. Failed to break to the upside, downside, upside, downside, upside, and now downside. You can see that this right here was right when the CPI numbers came out. We were initially had a bullish momentum and we had a big push to the upside because of the CPI numbers coming out better than expected. But then we were followed up by some solid bearish momentum. But you can see, look, a lot of traders got stuck because they would have been shorting below this bar or shorting below this resistance level. A lot of traders would have got stuck because they're trying to short below this level or short below this level. As you would know, and I've explained many times, that you want to be buying low and you want to be selling high. If you wanted to get into your short, you don't want to be getting into your short at a low position. You want to be selling as high as possible and buying as low as possible. And that's why it just shows that this is a high probability to act as a support level, because looking to the left, that's where we've continuously become and held from support. If we've been doing that for multiple weeks, you have to expect that the future is going to continue what has happened in the past. We're not overly trending to the upside or overly trending to the downside, and that means we're in a trading range. We're inside that 50-50 pattern, and you don't want to be getting short below this bar. A lot of traders would have been trapped below this bar. They would have been getting short in this area, and then bam, we just rip back up 3 to 4%. They get liquidated if you're using too much leverage, and a lot of traders are just laughing, thinking this is perfect. We've been in trading range price action. We're going to continue trading range price action. You don't want to be betting against the trend, and currently the trend is sideways. That's all I have for you for today. I really hope you've enjoyed the video. Make sure to like and subscribe, as I'll be releasing videos every single day.